What do you think about silver? Because it clearly hasn't had the same type of correlation as gold does. Do you have any opinions or future expectations with silver?
Yeah, that's a much messier market. So the reason gold has that quality is because, one of the reasons that gold is such a good money historically is that it has a high stock to flow ratio, meaning that the amount that
Hmm.
you create every year is low relative to the amount of that exists already above ground and in investment form. And so, it's not like you're heavily tied to what's happening with mining. It's really about kind of it treats more like a currency. In addition, the vast majority of it is for monetary use, either outright, coins and bars or funds, or in many cases like jewelry demand, of which a significant segment, like in India, is for wealth preservation. And so overall, there's a very big chunk of it that is for wealth, and a very small percentage of it that is for industrial usage. And whereas silver is a weird hybrid because it's not like copper or oil where they're pretty much purely for industrial use, but it's not like gold where it's almost entirely for wealth and storing and displaying wealth. It also has a stock to flow ratio, which is not nearly as high as gold, but it's way higher than pure industrial ones like copper or oil. And so it's kind of got
Hmm.
that hybrid status. And so a general trend you see is that you can't monitor it in the same way that you do gold. But generally, when gold is in a bull market, usually silver is doing better. When gold is doing very strongly, especially if you have gold rising due to disinflationary conditions, right? So like we had from say 2018 to 2020, we had inflation levels were going down because global growth was slowing, but then nominal treasury yields were going down even more. And so that's a disinflationary period of that gold benefited from, whereas silver did pretty poor. Now, ever since we came out of that March 2020 bottom, silver did better than gold because that's a more inflationary environment. We have a very sharp increase in the broad money supply. We had rising inflation expectations, and so silver, being a more inflationary metal generally, as it's both, it's a more speculative metal because it's higher volatility. It's also used in industry, and so it did very well in that environment. And so I look at things like the gold to silver ratio. I consider things like inflation levels, and so I like diversifying to silver overall. I'd expect, if gold does well in the 2020s, I wouldn't be surprised to see silver do better. But yeah, you can't track it next to broad money supply and real interest rates. It doesn't really have that tight correlation that something like gold has because it's not a pure currency in a sense.
Yeah, that makes sense. Well, Russia and India are two, good segues to the next question that I have for you, which is about gold, because Indian people love gold. The Russian government loves gold. Their budget, their balance sheet is fantastic because they hold so much gold compared to their currency. What is your outlook on gold, just in general, right now?
I would say fairly bullish with a 3 to 5 year view. And so I've been bullish on gold since mid to late 2018. And so we've been in a correction ever since August 2020.
Right.
And so the two major metrics I use to monitor gold are growth in broad money supply and real interest rates. And so over the
Okay.
very long term, gold has it generally keeps up with broad money supply growth. And you can think of it as the inflation rate for gold is somewhere around 1.5% due to mining, right?
Right.
So that's the inflation rate that it goes up. Whereas if you have, you know, if you have say a monetary inflation rate of 5% new dollars being created every single year,
Hmm.
then generally you would expect that the dollar price of gold would go up over time.
Right.
And that's generally the rate that we've seen it grow at, more or less, depending on exactly what time period you're looking at. If you have a sufficiently long period of time, it basically tends to keep up with what you'd expect.
Hmm.
Now, it can go way above or way below that trend, largely based on real interest rates. And so that's like say a
Okay.
10-year Treasury rate minus the inflation rate.
Hmm.
And so if you look at say the 1980s, after gold had that big spike, it then went into a 20-year bear market. And
Hmm.
even though inflation was still kind of hot for a while in the 1980s, the issue is that you had really positive real rates. So for example, if let's say inflation's 4% a year, but treasuries are yielding 7%, right? So
Right.
you can get a 3% real yield on your treasury just by holding that very safe asset. And so the opportunity cost for holding gold, which is a yieldless asset, is pretty high. And so gold's not very
Right.
desirable. Then let's say, fast forward, you have an environment where inflation's, say 3%. so it's even lower. But let's say the 10-year treasury is yielding 1%. So you're getting a negative 2% real yield on your treasury. And so suddenly that zero yielding scarce gold asset, it looks more attractive. And so gold has a very strong inverse correlation with real yields, and that's stronger than its correlation with the dollar. That's stronger than most other types of correlations. That's really the most persistent correlation it has. And so you can think of it as gold generally follows the broad money supply growth, and it goes above it during periods of low or negative real interest rates, and it goes below it when you have really strong positive real rates. And so because my outlook for 2020's decade is likely to have pretty significant broad money supply growth and probably persistently negative real yields, that gold is likely to do well in that environment. And so if you look at where it was in 2018, we hit a peak in real yields. So the treasury was yielding like over 3%. Inflation was about 2% by official ways to measure it, which is because the gold is largely a paper market that also generally it focuses on CPI, it focuses on tips market break evens, right? So we can debate what is inflation, but that's what gold tends to follow.
Right.
And so you had positive real yields of about 1%. And then, as you started to get slowing GDP growth around the world, interest rates came down on the Treasury, and eventually in August 2020, it reached about negative 1%, where Treasuries were yielding maybe 0.5%, but then you had some degree of positive inflation, and so negative real yields are about negative 1%. And so gold kind of found a top because it's inversely correlated to that. But then when nominal Treasury yields started rising, gold started to have a correction. And so we've been in that like 8-month correction, and we're showing some signs of a bottom, but it's a little bit too early to kind of fully confirm it. But my base case is that it's looking better technically and fundamentally now than it was over the past few months. And so my base case is that we're still going to see pretty significant money supply growth, probably lower negative real yields later this cycle. And so I still have a favorable outlook for gold with, say, a 5-year view.
And so basically, if we zoom out then and kind of were to chart that, you'd see the money supply growth. And then you would see gold generally following that over a long period of time, let's say, 100 years or so. And then where gold fluctuates up and down around is based largely on real interest rates. And so that's the short-term driver, whereas the long-term driver, it's going to stick very close to the broad money supply growth.
Exactly, at least since 1971, since it hasn't been pegged. Prior to then, you had that artificial peg. So in many cases, gold was, for a couple decades held artificially low. And that's why when they released the peg, gold jumped pretty quickly because it experienced price discovery. But yeah, ever since it's been free floating, so we have about 50 years of data showing that relationship.